Happy Thursday, Maverick Traders. This is Rob Reinhold, and this is the Market Roundup. We are one day off of the FOMC meeting. Let's see what happened today. In this session, we're going to take a look at the news. What happened? We're going to take a look at the technicals. Did we get a change in the markets? Then we're going to look through the sectors and find the best sectors for longs and shorts. I've got 3 trades for you. I've got 1 long, 1 short, and 1 sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, the market started off very strong with a nice gap up, and then we basically spent the rest of the day giving it up. But we still had a positive day at the close. We had a really nice jump from Micron earnings. Micron had a huge jump at the bell, and so with the Fed meeting and with these Micron earnings, we had a really nice global market rally happening around the world. And most of the markets around the world were already up 1.5%. And so we got a nice jump up today. However, we definitely did fade off of those opening prints. Other big news, we have the IPO market alive again. Reddit went public and had a nice jump as well. For the day, the Dow was up. The S&P was up 1/3%. The Qs back down to only 0.2% up. At one point, these were up about 1.3, 1.4% for the day. The Russell held on to a nice gain, but again, this was also up 1.5% at the highs. Oil slightly down, gold up 1%. But let's take a look at this AD line. In the morning, this was closer to an 80% advanced decline line, and you can see throughout the day, we just tended to weaken quite a bit. So let's take a look at the charts. We got a nice breakout yesterday from a base pattern, and you can see we got a gap up and a fade today. Okay, if we were just really focused on what's going to happen for the next 24 hours, this isn't a great candle. Anytime you gap up and then fall, you have more sellers and buyers. It tells you, especially when you close on the low, it tells you that when the market closed on Thursday, there was still a supply and demand imbalance to the sell side. So we would expect there to be at least a little selling in the morning, maybe some buyers come back in, but I think you have to take a look at tomorrow just being, again, maybe a flat to slightly down open. That being said, in the grand scheme, we spent 2.5 weeks basing. We're just one or 2 days out of a breakout. So I don't think you can say, oh, this is some sort of warning sign of impending doom. It was just a big gap up, and there wasn't any gas left after the big gap up. I can easily see us backing and filling. We could come all the way down to this 51.90 area and still be perfectly fine as long as it doesn't go back down into this base. If we take a look at the NASDAQ candle was a little worse, definitely a little worse. And you can see we are now back down pretty close to back in the base that it broke out of. The NASDAQ is definitely showing some underperformance compared to the rest of the market. Again, we closed on our low. I would assume that's going to lead to just a little bit of selling tomorrow morning. I don't think there's going to be any sort of big gap. We do have 3 big companies announce earnings after the bell. 2 are responding well. 1 is responding not so well. I'll talk to those at the end of the video. But I think this is just going to be a pretty normal Friday coming up. We take a look at the heat map. First thing that really jumps out was Apple. There was some news out of Apple that they are being sued for antitrust by the US government. They're already being sued by the EU over antitrust concerns. But as you can see, outside of that big red, there was just a whole lot of green across the board. We are at a +3. We had backed down to a +2 this last week. So we actually took down our +3 for the first time in a while to a +2. Just said, look, it doesn't make as much sense to be fully bullish. Let's just back it off a tiny bit And you can see we got the breakout. And so the technicals say we have to be at a +3 at this point. So there's no question it is a clear +3 in this market. Let's go ahead and take a look at some of the trades I've got. I've got one bull, one bear, and one sideways. On the bullish side, there's some really good looking charts here. I'm going to pull up a Goldman Sachs chart here. Take a look at this breakout and take a look at how long this base was. This is a really, really substantial breakout in the financial sector, and the financials are looking really nice. But the stock I want to take a look at is Ingersoll Rand in the industrials. Industrials have been one of my favorite sectors over the past couple of weeks. Take a look at this base. We have been basing now for a month, and we've got a nice breakout with some decent volume. Everything looks good here. Now look, yes, we have had 2 big up days. We could easily see some backing and filling. That would be just fine. I think as long as you're willing to go out at least 3 weeks, I think a 95-100 makes some sense. If you don't want to be that bullish, then do like a 95 if there's a 97.50, do that, or a 95.98 if there's dollar strikes. I think you can easily make a nice bullish spread here. But like I said, I think you want to give it some time in case there is a little bit of backing and filling off of this breakout to the upside. But this is just a picture perfect, absolutely picture perfect high base. And you can see the 20-day moving average is the thing that pushed it out. It would not go below the 20, so eventually it was pushed out of the top by that moving average. As far as sideways trades go, I didn't find a lot of stuff I loved sideways. And look, I'm not in love with this one sideways as well, but the thing I'm always looking for is flip-flopping moving averages. Flip-flopping moving averages. Flattening out. We have this range, this ultimate range here of 130, 132 up to 155. That is the big range. Now, obviously, that's probably a little too big for any shorter term butterfly. So I think we can come in and take a look at the upper half of this, where we find some support levels down here at the 142. We have some resistance up at the 155. I think you want to be right in the middle of this. Google is going to have some dollar strikes. So I think you could take a look at something like a 144, 148, 152. This could easily be a place to look for a butterfly if you want to go a little wider than that. And 142, 148, 154. If you want to tilt it a little bit more bullish, then I think you go with 150 or maybe even 152 as a midpoint. And maybe you do something like a 160, 150, 151, and then 155. Something like that. As you can see here, I don't expect this thing to break out and run past this high that we set back in February. And on the short side, you know what? I looked at a lot and I found some really good looking shorts. And I wasn't going to do this one, but this one looks so great. This Chewy has been weak for months and months and months and months. It goes well back from this chart. Pull up a chart, you can see this thing has been low basing kind of in this area here for about 6 months. And we're finally looking to break below. We had an earnings report that after a big up day came out really disappointing. And you can see close on our lows. Where does this one go? Well, I think it's headed substantially lower, but short term, I'm looking at a 15-16 bear put spread. I think you could easily look at that one. That one's got probably 70 cents of upside, 30 cents of risk in it. Let's talk about tomorrow. So look, we have 3 stocks after the bell. We have Nike that you can see here is up about, well, up 3% after hours. We also have FedEx that is just absolutely soaring, up 32 points after hours, 12%. So huge jump in FedEx. So Nike, sort of positive, mildly positive, let's call it. FedEx, huge jump in FedEx. And then let's check in on Lululemon because Lululemon is quite weak. So I'm going to call this a mixed earnings after hours. Look, it's mixed. So again, I don't think there's going to be any huge big gap up or down. And based on how we close on our lows, I think we're flat to slightly lower is going to be my call. A lot of times we get more volatility on Fridays. I see this Friday as we had a lot of energy spent. We had a lot of things happen. I could see this Friday just kind of whimpering into the close. I don't see a big move up or down. So I think it's going to be up 0.5%, down 0.5%, a fairly flat day. Now, of course, things can always change. The market doesn't have to listen to what I said, but we have no economic reports, no other earnings reports. I just see this as a week that we're going to go into the weekend, and then next week people will come back. A lot of energy has been spent. I think we basically do a little bit of resting tomorrow. That is my opinion. That is the market roundup. Thanks for joining me. Bye, everyone.